Hey everyone, welcome to today's episode of the Welcome Home podcast. Over here, we'll be talking all things property from renovations to mortgages, all the way to interiors and dressing a home. Now, I'm here to learn just as much as you are, so I am so excited for our Interviewing an Expert episodes where we're going to be interviewing estate agents, mortgage advisors, all the way to interior designers. Today, we'll be talking to Ellie Papa. She is a mortgage broker, and to be honest, she's the only person that's ever really made talking mortgages interesting for me. So she's of course regulated by the FCA to discuss and advise on mortgages, and I just thought she was the perfect person to talk to today. So Ellie, thank you so much for joining us today.
Thank you for having me.
Now I've really wanted to have this mortgage conversation because obviously it comes, hand in hand with you getting a house, you're more than likely going to be getting a mortgage. And I haven't actually spoken to anyone besides you that's actually made me interested in mortgages. So I thought you were the perfect person to discuss this with today. But before we get into it, I would love it if you'll kind of explain what your role is as a mortgage broker.
Okay. Well, first of all, thank you so much for the flattery. I really appreciate it. There are definitely much better advisors out there than me, but I'm also up there, so don't worry. So my role, I am a mortgage and protection consultant. So I advise on mortgages. I write them as well, of course. And with protection, that's kind of the insurances. So that's the home insurance, the contents insurance as well. But most importantly, your life, critical illness insurance, and income protection as well. So I cover a whole umbrella, a whole range of products, and I work with so many lenders who can give these mortgages for some beautiful homes across the whole of the UK.
Amazing. So I feel like with anything, we should start right at the beginning. I'm sure like most people who are listening will know the answer to this question, but we've got to start somewhere. So what is a mortgage?
Okay, of course. Ground zero. So with a mortgage,
Exactly.
it is it's a loan. It's taken out it's a loan taken out from a lender, of course. 9 times out of 10, it will be a bank who will sort of fund it, or a building society, and this will assist you in buying property or land.
Perfect. So when it comes to getting a mortgage, I think if you're kind of not educated in this, I know for me personally, when I went to get my mortgage, the first thing I did was go to my mum and I was like, so what do I do? Because it's not something we know about. So say I'm a first time buyer and I'm going to apply for a mortgage. What different types of mortgages am I going to come across?
Okay, so I mean, makes sense. I mean, even myself, when I first got my home, I went to my dad, So before, I mean, I'd done all these mortgages, but when I actually came to do it myself, you're like, oh gosh, now it's me in the hot seat, And writing one is very different to getting one. It's the horrible contrast, but it's good.
Yeah.
It's especially as a first time buyer as well, and that is the most exciting part.
Yes.
But the most important part is to understand that this is going to be, or one of, if not the biggest financial transaction of your entire life. So It's all exciting, don't get me wrong, and you want to speak to mum and dad, and mum or dad, whoever, or your friends, or maybe some colleagues, or maybe even your boss, someone who is in a position where they have taken it out before and they are a little bit scared. But the best person always to go to is an advisor, and whether that is in a bank or in an estate agent or a private or kind of a family friend one, whoever, but they will answer the questions that need to be answered, and answer them accurately as well, because the worst thing is when you get a case of, I don't know, the whispers, and someone says, oh no, you should go for this type of mortgage, but that's because they had bad credit and not enough deposit.
Yeah, no, I tend to find people they're very opinionated, aren't they? Because when I was getting my first mortgage, I was like, oh yeah, that people would ask, have you got your mortgage in principle? They'd be like, so what are you going for? And it's like, oh, what do you mean by that? That question feels loaded.
Yeah, it is very loaded because there's so many things that come with it. There's number one, there's what kind of mortgage. So you get a capital repayment, which is where you have the loan and you are repaying it over a period of time. It's my very fancy graph that I have there. And then we have interest only, which is more for well, it's more for investments and people who
Yeah.
have kind of as a minimum, generally as a minimum, 25% deposit. But you're
Okay.
paying on the interest only. So you'll never pay off the loan. So it will always stay there, again, with the graphs. But essentially, there's that, first of all. Those are the two types of mortgage. Then you've also got the interest rate and how long you're going to fix it in for. And if you're going to fix it at all, because with interest rates, it is most common. 9 times out of 10, you do find that you do want to fix the interest rates, especially at the moment. Economically, the climate is at an all-time low, or it has been ever since, of course, coronavirus. And it has definitely been the time to lock those interest rates in, because they are so low. I've seen them as low as 0.88%, and that's unheard of. It's generationally unheard of. But then we also have some people who don't want to fix them in because, I don't know, whether they like a gamble or whether they you just never know
a bit of fun. They like to live on the edge.
But sometimes it does pay off, because people previously may have, kind of post credit crunch time, rates would have been extortionate. Well, kind of building up, as it were. But with those rates, people might have then had to remortgage, locked in those rates, and now they're still in those rates because they fixed it in for, say, 10 years, So that's why some people do that. But there's so many different ways of kind of looking at your interest rate and whether you're going to fix it in for those 2 years, a 3 year, 5, or maybe even a 10 year. It's entirely up to you. And then, of course, we also have the term. But we're getting into it. Let's slow it down. Let's slow it down, Emily.
We'll go step by step.
So you're like, I've run out of content.
I'm like, how do we kind of get into this without everyone listening being like, whoa? Because it is a bit whoa, isn't it? There was a lot of things when I got my mortgage that I didn't really consider, and I obviously started talking to people about it, and some people had to go and get doctor's notes from their doctor, and it's all the kind of like the life insurance and things like that no one tells you about, that are things that I didn't even consider. But I guess for kind of first time buyer, first time person looking for a mortgage, what do you kind of need to pull together document wise to then go to, say, an advisor or someone to kind of, first steps?
Okay, so with documents, every advisor is different. Generally, I myself have started asking for people for just the one payslip, because I found that with a lot of my clients, 3 payslips, 3 bank statements, and the proof of deposit and your IDs and this and that, they just want to chat to me at that point. They just want to know, can I even get a mortgage? So asking for all that documentation on the first initial appointment, it's a bit unfair for my clients. So I now ask for 1 payslip and 1 bank statement. The bank statement allows your advisor to have a look at direct debits. So those are your committed expenditure each month. And they can also have a look at any, I don't know, red flags, like what's going on here, why you at a gambling shop every week. Like,
oh gosh.
Because I don't know, I mean, lenders do look out for these things, because why would you loan all of this money to someone who is going to blow it on Chelsea versus Juventus, like you never know.
Absolutely. So
we'll see. But we look at that for direct debits. We look at car. So it essentially just allows us to pick up the balances at the end, the savings that you might have in the background. But it allows us to kind of dig into it. And then on the second appointment, we'll go through it on a much more refined basis. We'll ask for the full balance outstanding on the car, that sort of thing. And then with pay slips, if you just kind of have a basic pay each month, then to be honest, it makes sense just to have the one. You don't need to show us that there are 2 others in the background, as long as you've been there for a reasonable amount of time. Some lenders accept 3 months, some lenders accept 6, some lenders need you to be there for a year, but it is lender to lender. That's the main thing. However, with like self-employed, I wouldn't want anyone self-employed to miss out. So I would always ask for sort of minimum 3 if possible. If not, 2 is fine. It is a bit of a stretch, but we can look at 1. But ideally we would have 2 or 3,
Okay.
just to give them the best possible chance with getting the right amount of money for the house that they want.
Yes.
And likewise with people who are commission based or bonus based or overtime based. Again, they are all calculated in different ways, but if they've got 3 months where that overtime is a lot better in 2 months ago, rather than maybe this month they just took a kind of an off-key dip, then we would look at all 3 to make it fair and average those.